Here's a question for you. What does China's unassailable lead in terms of naval power, the wording of recent US statutes, and the adaptability of shipping all have to do with how a chief financial officer eats their breakfast? Well, I'll tell you. It's all about how shipping perceives risk and uncertainty right now. Uncertainty has dominated the shipping industry in recent months, but this narrative that ship owners are somehow paralysed by geopolitical volatility, well, that's only part of the story. The global economy is at a crossroads. We are entering an era of superpower rivalry between the US and China, and that will fundamentally upend established trading assumptions and fragment shipping down geopolitical lines. You've heard us talk about this before. Depending on who you are talking to, though, the response to that uncertainty results in either a barely concealed fist bump of joy as they mentally run through the profitable opportunities ahead, or near-term paralysis as they conclude that there is no real value in strategic investments right now, certainly not in the face of such unknowable odds. And that's because this isn't just about the long-term disintegration of a rules-based order that we're talking about, although that is obviously part of it. Near-term, that uncertainty is created by the fact that it is now security, not economics, that is at the helm when it comes to US decision-making, and that's confusing for everyone. If you're in shipping, it's in your DNA to adapt. Agility is the new currency for shipping. We have to adapt to these challenges. Volatility is the lifeblood of profitable shipping, and certainty has never been a prerequisite for making decisions. So why complain about the exogenous shocks now? Well, yes, to a point. On stage last week out at North Shipping in Oslo, the message was defiant. Ship owners paralysed by the geopolitical swings risk losing out. Offstage, however, their commitment to specific questions of progress and investment, well, that was slightly more hesitant, because shipping still needs to make decisions on a daily basis, and that is difficult. And that's what we're going to talk about in this podcast. But before we get to that specific end of things, I want to take you through a few conversations that will help explain the context and why I think this is ultimately about good old-fashioned risk management, diligence, and discipline. And I'm going to start by introducing you to a slightly scary chap by the name of Øystein Tunso. He's Professor of International Relations and Head of the Security in Asia program at the Norwegian Institute for Defence Studies. His basic thesis is that we have entered into a new era of superpower rivalry between the US and China, and this new superpower rivalry is at sea, not on land, so maritime matters. The rapid rise of China as the dominant maritime superpower comes with real-world problems for everybody in shipping to deal with.
Well, so it's not just the economic landscape, it's everything. It is the technological developments, it's military developments, it's all the new domains like space and cyber, it's climate change. All of this is affected by the rivalry between the United States and China. So yes, China has risen and become so powerful that they are able to challenge the United States. And that is what has changed. So if we go back 10 years ago, that was not the case. And once China have risen so much and get to that point, then you have entered this new era of superpower rivalry between the United States and China, which is very different from the post-Cold War era, where the United States was the only superpower and where we had this globalization and how the international economy was organized in a sense. So we will see how this sort of spill over to more or less any aspect of international politics.
If you are particularly keen on sleepless nights, I would highly recommend delving a little deeper into Professor Tunso's body of work, which looks at everything from the likelihood of a Chinese invasion of Taiwan to the naval-civilian crossover of China's maritime nexus. Trust me, it's not light reading. But the underlying question from all of this big-picture superpower risk analysis is whether shipping should be more worried than it currently is, because if you boil all this down to its logical conclusion, what he's saying is that shipping is likely to face a future where it has to choose sides.
Yeah, I think, they should worry about what we're seeing now, the spillover effect from this rivalry, whether it's the port fees and these things. the measures that the Americans are doing when it comes to tariffs and sanctions and so forth. And they should be thinking of, how would we deal with any war contingencies, any form of embargo or blockade. I mean, if you're investing to build a ship or several ships in China, like we have Hög in Norway, contract for 12 or 13 roll-on, roll-off ships in China for the next decade. I mean, you can be stuck with those ships if there are a conflict. But I think the broader question you raise is about freedom of navigation and whether we are moving towards a more polarized world economy, in the sense that if this rivalry, it doesn't need to be a new Cold War, but if it becomes more intense and more decoupling, as we see, especially in the technology sphere, but if there will be more decoupling also in the economic and trade sphere, you are gradually then moving towards this kind of bipolar two systems. Either you trade with China or you trade with the US and some of its allies. None of US allies want to move in that direction. Not Germany, not Japan, not South Korea, not Australia, but you could be pushed in that direction in the next 10 or 20 years. And of course, most European countries, most US allies prefer to hedge their bets and, don't choose between the US and China. But I think you could end up gradually moving in that direction. And that, I think, for shipping, it has major consequences if you are forced to choose. Either you do your business with China or you do your business with the United States. So I'm not saying we're there, but I mean, in 20 years, one could move in such a direction. And especially if you have some form of Chinese attack on Taiwan, and the Americans say, well, we're not going to save Taiwan because it's too costly for us to wage war in the Taiwan Strait. Let's say this is 10 years down the road. But what they instead do is to pull back and then enforce a blockade against China to punish them for the invasion of Taiwan. And they will get the Japanese on board, they will get the Australians, maybe the Indians, maybe the Europeans. And then you have this blockade, and then for shipping, you really have to choose side in such a situation.
I appreciate this is all a little bit nebulous and macro, but bear with me on this. There is a thread to follow here, I promise. The point about this shift towards superpower rivalry is about understanding that there has been a shift in US policy. And this overt challenge to maritime dominance is not necessarily something that makes a huge amount of sense if you view it through the economic lens of globalized trade that we have gotten used to. It is national security that is at the helm now, and that's fundamental to understanding all of this. Here's Brian Maloney, a partner at the US law firm Stewart & Kissel.
You can look at the tariff actions and the changes from day to day and all of the press around it and get caught up in a feeling that, I don't really know what's going on and, what is all this uncertainty. But you also need to take a step back and look at, as I mentioned this morning, what's the underlying theme or the through line of all of these actions. And it's a little bit broader than just, we want to do more to compete with China, because all of these statutes have the word security in them. There's a new data security program that's been sponsored by the DOJ. There's an outbound investment security program that prevents the U.S. persons from investing in sectors like artificial intelligence and semiconductors. And all of this goes back to a sense that runs across the U.S. government that they need to do more to compete with China and also to keep their eye on national security and foreign policy interests with respect to China.
I think Brian makes an important point here, because I'm not entirely clear that everybody I'm speaking to has yet woken up to the fact that there has been a fundamental shift. And this is more than just a temporary bout of profitable disruption. And I also think it's worth just being clear about the fact that we are not talking about a Trump issue here. There is a bipartisan focus on China that is more than just about port fees in the US.
I think that it's one of those things that you can see the trend, but until there are catalyst events, it may not fully integrate into the industry. You saw with Liberation Day about a month ago that I've heard around town that there was a big pause. And so you could have those sorts of catalyst events down the road. And so I think it's definitely a long-term trend, but I think that the industry, also needs to keep their eye on just the overall economic picture. They're not going to turn on a dime because, as a lot of people have said, shipping has to be measured in years as opposed to weeks. And with respect to the Trump administration, and executive orders coming out day by day, you can penalize a first mover if they go and make a change based on a headline and then the rug is pulled out from under them a couple months down the line. So I think that people are smart and they see these trends, but they also need to think about how can they be strategic and how to adapt.
Okay, let's start to bring this back more specifically to shipping and what this all means. At the recent North Shipping events, we heard lots of the industry's big leaders pointing out that progress is not just possible amid this uncertainty, it is essential. A revolving cast of forthright industry leaders pointed out that in times of geopolitics on steroids, doing nothing is not a viable option. But how do you deal with that short-term uncertainty while also keeping an eye on the more fundamental divide between East and West that is looming ahead of us? Well, who better to help us out than the ever-philosophical executive chairman of Hua Kwong Maritime Transport, Hing Chao?
First of all, shipping is responsive. Shipping is adaptive and flexible. And the global economy is not going to stop with disrupted existing trade routes. New trade routes will inevitably come out. Now, China and US and major economies are not going to be simply passive in this. As they perceive problems, confronting potential export issues, whether it's US grain coming out of China or Chinese goods going to the US, they are going to seek alternatives. And China's alternatives have a name. That name is Belt and Road, which started a decade ago. And it's only now that many countries are starting to see the fruition of the Belt and Road. And the Belt and Road reach far and wide. So that is a very important aspect of global trade that increasingly we have to pay attention to. We should also pay attention to the fact that the fastest growing economic zone, macro zone in the world is the ASEAN. And therefore, over the last few years, people have already been talking about China +1. That's before the Trump administration. And if we look at the heat map, certainly intra-Asian trade, particularly between China and Southeast Asian countries, have accelerated as a response. So that is simply one illustration, but the same analogy, the same logic can be applied to different types of trade across commodities, energies, etc.
We have heard a lot recently about how resilient shipping is, how it navigates uncertainty, but this is more than short-term uncertainty. This current turmoil doesn't go away when Trump leaves office.
Some of the measures that the US government taking today, we have to remember that they were initiated before the Trump administration, 301 being a very good example in case, and we'll also see the US government being responsive after submissions, lobbying from industry players and from traders, shipping companies, etc. As you said, I do not see that tension easing, but with the introduction of the 301 as an example, this will also create room for other shipbuilding nations, such as Korea, such as Japan, to explore further opportunities. So in a way, it does have some sort of equalizing factor. So I think in terms of shipbuilding diversity is concerned, I think that 301 will achieve to a certain degree its desired impact of leveling the playing field somewhat. And in a way, you could say unfairly, helping Korea and Japan, whose shipbuilding industry has been suffering against very strong Chinese competition. including by private yachts. I don't want to sound like a Trumpist here, but from my viewpoint, some of the policies that have come out of the White House are not without reason. They're not without logic. However, the way they have been articulated, expressed, and take shape, take a very specific Trumpian form. And Trumpian forms are often discriminatory. And had they been done in a different way, I think they will be more acceptable to the global community.
Okay, so how are we going to get from this high-level concern over shifting geopolitical dynamics to the specifics of decision-making day-to-day in shipping? What about that breakfast, I hear you ask? Well, we're going to do that quite easily and succinctly, as it happens. Let me introduce you to Anniken Kildal, the unflappable, erudite Chief Financial Officer at Grieg Maritime Group. Now, to be honest, I could have offered you any number of similar voices at this point, but I think Anniken's pragmatic take on how she deals with decisions amid massive uncertainty was something that, well, we all need to hear right now.
In one way, you can say that there are more uncertainties. In another way, it's probably just different uncertainties or new ways of uncertainties. I mean, there will always be uncertainties in the same way as there are opportunities. Perhaps they even come thrown at us much more quicker than they used to before. But when we are operating a business, we are there. I mean, transporting goods is what we do, and as an say finance person, I cannot just sit and wait and see what's happening, and because if we do, nothing will happen. So what we try to do instead is to go to the math, go to the logic, and keeping things simple, taking care of our balance sheet, making sure it's strong, ensure that we have liquidity for new investments as well as for rainy days, and have flexible terms so that we are prepared. And this could relate to, for instance, now the tariffs, which we could face and have influence on the vessels. But it could also be to other situations which we haven't even thought about yet. So my point is that being prepared and being able to manage, it's much more important than sitting and waiting. Uncertainties will not make us refrain from doing new business. We are working as usual in terms of looking into new project, looking into perhaps new buildings or selling vessels or buying vessels and changing our trades, etc. We have to relate to what's happening out there and stick to our business.
The perception that shipping is essentially in a period of paralysis, unable to move because of all the uncertainty, well, that's not the reality day to day. The reality is actually, it's the basics of shipping. It's the strong balance sheets. It's reacting to things as they come at you.
That's right. It's and I think shipping wouldn't be what it is unless there weren't these uncertainties. And many times the uncertainties are also the ones that creates opportunities. Well, some uncertainties or risks are bad for business, but several of them are also good.
So short term, it's about the tariffs and it's about the velocity of news coming at you here in Europe every morning when we wake up. Anniken was on stage at North Shipping talking honestly about the panic that sets in when you read the daily news whilst having breakfast. And honestly, you could hear the nods of agreement from an audience that was overwhelmed by news on a daily basis. But they're also dealing with the long-term issues, decarbonisation, which fuels to invest in, and bifurcating trade ahead of us. Effectively, your beneficial ownership is going to ultimately decide where you trade in the world. That's a big long-term risk to deal with. So how do you deal with those two things simultaneously?
We have asked ourselves that question many times in terms of there are things that evolving which could be more different than in the past in terms of geopolitical risk. And at the same time, when we are in that business, we have to face that, and there could be places we don't want to go because it's not right, of course, legally or ethically, but we cannot really choose where we want to do business because we are a worldwide company and operating worldwide. So we just have to cope with that. But at the same time, we have over the last year diversified, also making investments in new short sea shipping, We have new buildings which will come in next year, and we're also investing into new green fuels. So we're putting some bets also on other areas, and we might not have done that if it wasn't for the changes happening in the world. But still, we do it because we think it will be good business.
The problem with an industry like shipping, where epoch shifts have been navigated before and corporate memory predates the birth of countries, is that the Zen-like composure in the face of crises can often be misread as blasé indifference. If you're in shipping, as we've said, it is in your DNA to adapt to challenges and to adapt to crises. Of course it is. But that doesn't mean that the industry is not genuinely worried about the pace of change ahead. We will, of course, no doubt, return to many of these themes in coming editions, but I hope you at least enjoyed some of the expert voices in this week's edition, navigating us through how they're thinking about this. Thank you to all of them for taking the time to talk to me. They were all recorded on the sidelines of the recent North Shipping events in Oslo, and I want to send a particular shout out to Marine Money for letting me record so much of this at their excellent event. Thanks, guys. That's where we're going to leave it this week. We will, of course, be back with more imminently, but for now, thank you for listening. Stay safe out there. Goodbye.